good afternoon, everyone. Thank you for having us here. It's so nice to see everyone in person. I know it's a small group here in person, but it's still really nice. It's really awesome to see the facility. I've never been here before. It's amazing. I guess there are some people online from my understanding, or this will be recorded, so welcome everyone online. Tansi, Unusaku, good afternoon. My name is Alyssa Flaherty-Spence. I am an associate lawyer at Gowling DeBeelge Law Firm here in our Ottawa office. I'll do a quick introduction of myself, and then I'll let Maria introduce herself before we get started right into the PowerPoint or to the presentation. Like I said, I'm an associate at Gowling DeBeelge. I work within the business and advocacy department. I have a split practice, but within the split practice, I work with Maria and the business law group on helping majority of my work has been working with Indigenous groups, Indigenous communities, individuals, on incorporation and on different corporate matters, both at an individual level and then also at a community level. I work on trusts agreements as well with First Nation communities and Inuit and Métis across Canada. I myself, I'm Indigenous. My father is Cree from Tataskua Cree Nation, Treaty 5 in northern Manitoba. And my mother is Inuk, originally from northern Quebec, Nunavik, Inukjuak, and relocated to the high Arctic to Grise Fiord. I was born and raised here in Ottawa, so it's home for me. Happy to be here. And maybe I'll turn it over to Maria to introduce herself before we get started.
Absolutely. Good afternoon, everybody, and thank you so much for finding time this afternoon and joining us for this session. It's a great pleasure to be here, and it's our pilot project, and we look forward for more sessions, and we hope it will be beneficial for your business, and it will be very practical and hands-on session. Just a brief introduction about myself. My name is Maria, my last name is Volkova, and I'm a commercial lawyer at Gowling DeBeelge at Ottawa office, and my practice focuses a lot on work with small business, and this is like my primary practice, and also like all general corporate matters, and I have like experience working with Indigenous business before, and look forward to our office hours and just to make sure that we can provide as much help and as much advice as we can. And I will let Alyssa to briefly go through our agenda for today, and we will get started.
So just a high-level overview of what we'll go through today. Maria's going to take you through the first bit of our presentation. But I understand some of this or most of this will be recorded, and so you'll have this later if you want to come back to it and to see any of the information included in the presentation, I believe, itself. So that would be helpful for you. So we'll go through incorporating your business at a high level. What does that look like? What are the pros and cons of incorporation? What are some of the tax implications and considerations? We know that tax is always a topic, especially in general when you're incorporating, but also for perhaps First Nations who are considering it. Some of the steps to incorporating at a high level. And then the federal and provincial incorporation, if you are incorporating, whether you want to do that federally or provincially. What is a minute book if you do incorporate? What does that look like? The obligations as an incorporated business, some of the annual corporate requirements that you are required to file, whether with the provincial or federal jurisdiction. And then some procurement policies that may be available and beneficial for you as an Indigenous business. And then available at a high level, I'll highlight some of the available programs and services for Indigenous businesses. So maybe I'll pass it over to Maria to get going on some of these.
Perfect.
Did you want to do this?
Yeah. Yeah. Oh, well, if I forget, please remind me because I had
I
attendance.
can do it if you want. Yeah.
Okay, awesome. Just like in a way of have also like better understanding, may I ask who of you already incorporated their business? Who is like in the step of deciding if it's a next step that you would like to take? So you're thinking about incorporating, thinking if it's the right moment.
Yeah.
Yep. Awesome. Okay, perfect. So the common question you might have, when is the right moment, and what factors you should consider? And a brief answer is there is no hard rule. It's important to consider several factors. First of all, the decision is usually based on financial circumstances. What is the current revenue of your business? What is the organizational structure you would like to reach? What is the nature of your business? What is the strategic goals you would like to achieve by like running your business? So considering all this as like a combination of factors would give you like an answer if it's the right moment or not yet. And we will mention it probably multiple times during our presentation, but it's crucial that especially at the early stage of like your decision-making process, you consult with professionals. So you ask for accounting advice and for legal advice. So in the next couple of minutes, we can go to the next slide, we will go through the main advantages, like benefits, why it's a good next step to incorporate, and some possible disadvantages and like drawbacks of incorporation. So, So first of all, like one of main advantages is when you incorporate, you create a separate legal entity. And a corporation has the same rights and obligation as like a natural person, so which means it can acquire assets, it can acquire debt, you can sue other parties, you can enter into contracts and can be sued yourself. And while corporation's money and asset, they belong to the corporation and not to its shareholder. The same is to debts and liabilities. So there is like a separation between you and like your business in this way. Additional benefit is there is more clear structure of your business. There is like a clear hierarchy in terms of decision-making process, and it just gives you more clear organization of your business. One of the main advantages of incorporation is to limit your personal liability. Because as a business owners, you really would like to consider risks and potential liabilities you will have, and you would like to minimize them. And corporation will give you this possibility. As like the main advantage is you create a separate legal entity, and it eliminates your personal liability. Unfortunately, it's not absolute. There are still circumstances when you can be personal liable. And one of the most common example is, for instance, if you look for financing for taking additional funds for your business and you provide personal guarantee. In this case, you are personal liable, and if the corporation cannot pay the debt, it will become your personal responsibility. Other good example is that if you hold a different role with the corporation, not just as a shareholder, if you become a director. In this case, you can also be liable for several liabilities of the corporation. If there is like remittance and HST payment, if there is like outstanding payment for your employees and deductions for employees. In this case, you can also be personal liable. And there is particular circumstances it is more applicable for professional corporations. For instance, for dentist practice, you cannot protect yourself from any negligent claims, so it's still like personal liability. One of like main consideration to have is like tax benefits that you will receive if you incorporate your business. And one more time, having a great conversation with your accountant is very, very important. We will go through like general overview of main benefits, and we'll give you like food for thought in terms of tax benefits. So first of all, generally, corporate tax rates are usually lower than if you run your business as a sole proprietor or through like general partnership. Moreover, a corporation gives you more flexibility how you will pay profit to yourself. Will it be in the way of salary, of bonus, or of dividends? And this can be, very important at the moment when you pay your taxes. So it will have more flexibility for your business. Also, it's crucial to mention the possibility of small business deductions, especially if you are at the early stage of your business development and your income is like less than $500,000. This will be a significant consideration to have, as you can have a much more favorable tax rate for small business deduction. Other consideration to have in mind: what is the next steps you would like to take? If you're considering selling your business, this is other thought to keep in mind, because you can get capital gain exemption, which is currently $880,000, and technically you might be in a situation where you don't have to pay taxes when you sell your business if your business is incorporated. So this is all like consideration to have in mind in terms of taxes. And one more time, again, it's a conversation with your accountant in terms of planning, but it's just always good to keep this in mind. Other like aspects to also consider when you're deciding to incorporate your business or not is that with the incorporation you can have easier and better access to capital. By this, I mean that you can actually attract equity by the way of offering shares, bonds to investors. This way it will be additional attraction of funds. And when you are like a sole proprietor, it's mostly your personal funds or like personal loan. That is like a limited way how you can attract equity for the business, and it can be crucial for your growth and for expansion of your business. Also, it's generally more attractive to investors, to your employees, to potential customers when they see that the business is incorporated. And don't get us wrong, it's not like any connection that your business will not be successful if it's not incorporated. It's just a general public opinion that a business would consider more trustworthy, more legitimate as if it's incorporated. So it's just general public attitude. And other very important consideration is that when you incorporate your business, there is no life limit, because if you run your business as a sole proprietor, it's always connected to specifically you and like a life limit, and the same is to the general partnership. With a corporation, it can go beyond the life of their shareholders, and it can be also very important factor to keep in mind. The last but not least is the name protection. So when you incorporate your business, and especially you incorporate it under name, not under like as a numbered company, you get several protection on the province where you operate your business if it's a provincial business, or like all across Canada if you incorporate a federal business. It's like a process to go for the name approval. There is a nuance search that needs to be pulled and double check that the name is available, and Alyssa will talk about it a little bit later. But just like as a general consideration to keep in mind that by incorporating your business and also considering your brand strategy, this will give you some name protection. This is like the main advantages of incorporating, and of course there are some negative sides and drawbacks that you should also consider. So first of all, it's additional costs. Obviously, incorporating your business, it involves, seeking legal advice, accounting advice, and the incorporation process itself. It involves government fees. So it's just, additional fees you should consider. And it's not one-time payment because corporation also, and you would have to maintain your corporate records, your minute book, your registers and ledgers on an annually basis, like file your annual return. This will also include additional expenses and like fees to keep in mind. Also, by incorporating your business, you increase the level of formality and some complexity that you should be aware of, because corporation is a separate legal entity that has no physical form. So every action, everything which is done by the business, like through corporation, has to be formally recorded by the way of resolutions in your minute book. So it requires more administrative effort to make sure that you keep a very clear corporate records and you update your minute book on every action and every changes that took place with your business. And also disadvantage to keep in mind is that when you incorporate your business, you create a separate legal entity and you will not be able to use some personal tax benefits that you potentially can use as a sole proprietor. So there will be no personal tax credit, potential educational or tuition credits that you can use to reduce your tax burden. If you have a conversation with your accountant and with a lawyer and just thought about potential costs and did your pros and evaluate is it the right next step, and you decided that it's too early right now and it's not a good next step to proceed, please keep in mind that if you would like to operate your business as a sole proprietor and you would like to do it under different name than your personal legal name, you should apply for a master business license. So this is a permission given by the province to operate your business under particular name, and you would also have to go through the process of registration and approving that the name is available and you can use it. And please also keep in mind that this permission has a period of time when it's valid. It's only for 5 years. After that, you would have to reapply for a new one. And again, it's only a permission to run a business under a particular name. It does not limit your liabilities. It's just a permission from the government. So I think I will let Alyssa take it from there, and we will talk more about your obligations in a second.
So, thanks, Maria. Again, for the people that joined a bit later after I did my introduction, again, my name's Alyssa. I'm a lawyer associate at Gowling DBLG. I was born and raised here in Ottawa, but my mother is Inuk, originally from northern Quebec, and my father's Cree from Tatasquia Cree Nation in northern Manitoba. So as we go through some of this, Maria touched on some of the tax considerations, and I would just like to reiterate that when going through this process of whether to incorporate or seek in maybe tax advice, always urge you, and this is the legal side of us, is to consider speaking to your accountant for sure before making any tax considerations or tax decisions. I will provide some information here, but again, in addition to an accountant, you may want to speak to a tax lawyer as well. I'm not a tax lawyer, Maria is not a tax lawyer, but that's our disclosure right there. So what does it mean, though, for taxes for Indigenous people? Particularly, it's more relevant for those who are status Indians under the Indian Act, and I say Indian based on using the term in the Indian Act. So the Indian Act exempts the property of an Indian again, using the term there, or a band situated on a reserve from being taxed. So we're looking at the Indian Act here. We're looking at Section 87 of the Indian Act, and I pulled the exact wording from that as well in the Act, and you can look this up at home. So it says Section 87(1), the following property is exempt from taxation: the interest of an Indian or a band in reserve lands or surrendered lands, and the personal property of an Indian or a band situation on a reserve. No Indian or band is subject to taxation in respect of the ownership, occupation, possession, or use of any property mentioned in paragraph 1A or 1B, in otherwise subject to taxation in respect of such property. Again, like I mentioned, Indian means a person who, pursuant to the Indian Act, is a registered Indian or is entitled to be registered as an Indian. So, and taking that Section 87 of the Indian Act, we then look to the Supreme Court of Canada, and they highlight in a case, Williams versus Canada in 92, the purpose of Section 87 of the Indian Act. It is to preserve the entitlements of Indians to their reserve lands and to ensure that the use of their property on their reserve lands was not eroded by the ability of governments to tax. So Maria touched on at the end of her portion, if you decide to not incorporate, what does that look like as a sole proprietor? And so when it comes to being a sole proprietor and the tax considerations, this is what the courts really look at. So for a sole proprietor to benefit from the tax exemption 87 of the Indian Act, there's three things. The sole proprietor must be a status Indian, so this does not include non-status or Inuit or Métis. The property and the income of the business must be located on reserve. That's always something that people are always questioning, and it has been debated, and there are factors that the court considers when looking at that. And I'll go through that in a second. The business must satisfy the connecting factors of the test, which is known in the Supreme Court case Williams versus Canada. So the court will look at whether the business is sufficiently connected to the reserve such that it is tax exempt. And this is done by about two pieces of the test. So they look at whether examining the potentiality relevant connecting factors such as location of the business. Do you have your office or your location, your official location, on reserve or off reserve? Where is the work actually carried out? And so whether you have employees, whether the employees are located on reserve, whether off reserve, whether you do most of your business on reserve or off. And a couple other factors. They analyze these factors with three considerations. They look at, again, the purpose of the Indian Act and that Section 87 that I just had gone to, and the type of property at issue, the question of the property. So whether that's your capital, your revenue, maybe it's other actual physical items that you have in your business, and then the nature or incidence of the taxation of that property. So, in examining whether a business is tax exempt, the court will consider the location of the control and management of the business, the books and the records, and where those are located. And so when I talk about books and records, that's your accounting records, maybe your minute book as well, where your office is located. And your office could also be registered under you personally as well. So I'll talk about that in a moment. The location of training and hiring, whether if you have employees as well or contractors, what does that look like? Where are they working from? And where the equipment is stored or maintained if that's part of your business. And that's just talking about sole proprietors. And so when it comes to incorporation, When it comes to a corporation itself, on or off reserve, so no corporation on or off reserve is tax exempt under the Indian Act. When it comes to a partnership, the partnership could be tax exempt, but 51% of the partnership has to be on reserve. And so if your partner, let's say just basic one-on-one, then the one person has to be located on reserve. The property and income, again, similar to what I just talked about, has to continue to be on reserve, and the business must satisfy those connecting factors that the court identified. When it comes to a joint venture, the property or income must be situated on reserve, and again, they must satisfy the connecting factors that I mentioned as well. So those are some of the tax considerations. When it comes to federal or provincial incorporation, if you decide to go that route that Maria had gone through and talked about, if you decide to go that route after talking to an accountant or a lawyer, and now the next question is whether you incorporate federally or provincially. So there's different considerations to think about. When you talk about federal, you're governed by the Canadian Business Corporations Act. And then when you are governed, or when you are incorporated provincially, you're governed by the provincial or territorial applicable Business Corporations Act. So for Ontario, it's the Ontario Business Corporations Act, and then every province or territory has their own. Federal incorporation allows you to conduct business across Canada, so it doesn't limit you to do business just in one province or territory. But you also still have to register your corporation in each province and territory that you work out of. That's at a high level. There's more to that, or where you intend to operate. If you incorporate provincially, you can only conduct business in that province. If you want to expand to another province or territory, you can register your company in that province or territory or in that jurisdiction. However, you also need to check the corporate name before you register that in that province or territory. So your name, you may have a name here in Ontario. Let's say you want to expand to Quebec. You have to check your name and do the corporate search to make sure that you're not, your name doesn't fall under another corporation's name in Quebec. Federal incorporation ensures that no other corporation will have the same corporate name as you do as your business across Canada. And the fees for incorporating are quite low, but keep in mind there's other considerations that you need to keep in mind when you are incorporated, and we'll go through that, such as the fees, some of the uptake, and some of the filing that you may need when you're incorporated. So regardless of whether you decide to incorporate or not, or where you decide to incorporate, if that's the route you want to go, you have to register to do business in each province or territory that you are operating in. So if you're selling goods, if you have employees on the ground, you have to take those things into consideration where you're incorporating. So things to ask yourself when incorporating federally or provincially. So 1, am I looking to expand into another province or territory across Canada? Do you see that in your future? 2, do I want name protection across Canada or just my province? When I think about names for Indigenous groups or for Indigenous companies or business owners, I often think of traditional names as well. And so you may want to think about that, or that's something that's maybe on top of your mind if you want to protect from cultural appropriation. That's a whole nother subject, but that's something also to keep in mind for you. It may be a traditional name that you really value, and you want to protect that. Or just your own personal name. So what resources do I have available to undertake incorporation? Like Maria said, it does involve other resources that you may need to consider, such as maybe a lawyer or an accountant. And then what are my future business growth goals as well? And that may change, of course, over time. So some of the steps to actually incorporating, this may be applicable to some of you if you decide to go through that. One, name of your corporation. So you can incorporate under a name or a number. So often you'll see number corporations and then you can change it to your name. A number name is the simplest way to incorporate because there's a number that's assigned to you. You don't choose the number, it's just assigned. You can use a different name to conduct business provided that you register the name under the Business Names Act. Number 2, articles of incorporation. So this would be the next step. So the articles of incorporation is a document that outlines the name that you choose for your corporation, your business, the shareholders. You may just have one shareholder. Sometimes you have 1 to 10. It's a minimum and a maximum number of shareholders. You can have a share structure and classes of shares. Sorry, I meant the directors. You can have a minimum and a maximum, and then a permanent address for your corporation. The address is relevant. It's a legal requirement. These are legal requirements, but the address is applicable if, let's say, back to what Maria was saying, if you are being served as a corporation, they need the address to reach out to you to be able to actually hand you a service if you're being sued or if you're going through a litigation. Any restrictions that you have on your business, the language, your preferred language of business, and other provisions that may be applicable. And then where is your registered office for your business and the board of directors. So often very small businesses, they may just have one director, which may be just yourself. It could be you and your partner, but often you do have to put your directors as well. And you'll notice that federally, and Maria may be able to know this, is that federally you can do a search online under the website, and you can find companies that have been or businesses that are incorporated, and you will see the number of directors. You can see who they are. You can see their registered office. So that's all available online. If you are incorporated this federally, for example, you can pull this information up on your business. You can go to the next slide. So when you are incorporated, you are required to have, regardless if you're incorporated federally or provincially, you are required to keep the incorporation status within a minute book. The minute book includes your share records of all the information about your business. A minute book, I describe it as the legal document or the legal package of who your business is, what your business is, the legal structure of your business. And as it grows or as it develops, it also incorporates, it will have the filings or the annual returns or the annual documents for your business as well. And so it provides any company updates, any business updates, and then again, the annual returns and resolutions. So resolutions would be more applicable if you have multiple directors. Think about even a not-for-profit, they'll have resolutions and you'll keep that record in the minute book. Often minute books are stored sometimes with your lawyer or with yourself, but they have to be at an office typically that is registered on file. Most of the official records of documents and activities that are not included in the original application for the incorporation process is included into the minute book. So this will include things like your bylaws, your initial bylaws. Those may change over time. The first director resolution, first shareholder resolution, director consent, subscription for shares, shareholder register and ledger, digital notices of uncertified shares, and other documents required provincially and federally. So these are just the corporate records of your corporation. And it may be not there, it may be developed over time. So again, a minute book is really just an assembly of all of the important corporate records, and most importantly, the articles of incorporation. Again, the articles of incorporation is what you start off with the incorporation process. The lawyer or whoever is registering your business will put that together. You can also do this on your own as well. So you can look this up federally or provincially and how to incorporate, and that will all be there. It's quite easily accessible online. So a minute book is typically a physical binder. I think we've kind of shifted a lot towards electronic minute books. I haven't seen a physical minute book in years, maybe because I'm a bit younger, but it contains, again, the required documents of your corporation, and it could be an electronic format. It more so is today. We as lawyers use that corporate minute book to refer back to it quite often in terms of maybe any kind of resolutions, or maybe you're selling your business. We will look to the minute book. If you're selling your business, we have to pass on the minute book to the new owners. And so it's important for different reasons. Again, the required documents, and you have to maintain the minute book. You have to upkeep the minute book. They include the articles of amendment. So if you change the corporate structure of your business, let's say you change it from 1 director to 5, you have to update that in the articles of incorporation. Let's say if you have bylaws and you want to amend the bylaws, the amendments will also be stored in your minute book. The unanimous shareholders agreement, the minutes of meetings and shareholder resolutions, any notices that have been filed, a share registry or register with shareholder names and addresses and details of shares held, and a securities register. And so some of this, again, if you have multiple shareholders, this may be something more applicable for you. So maybe I'm going to pass this over to Maria, and she'll continue some of the presentation as well.
Alisa has mentioned the organizational process and creation of the minute book, and we talk in details about all documents you should be aware of. And unfortunately, it's not just in the beginning of incorporation process. It's not that you do it once and you have a set corporate records. Minute book is kind of a living body of your company, because any corporate changes that took place from like a minor one to more significant ones, for instance, your company changed register address, or you changed the corporate name, or there is a change in the board of directors, or you would like to enter in any significant contract, or potentially you bringing significant employee. All this is the actions that requires the approval by directors and officers. And that is why annual corporate compliance and annual corporate maintenance of your company, of your corporate records, is crucial. And unfortunately, we've seen situations when this been overlooked and corporate records were like not updated. And despite the size of the business, despite of the industry, it's just a vital part of your day-to-day business and day-to-day operation of your business. And just talking about annual corporate compliance, to divide it into two simple parts. Like number one is the annual return filing. So very important, it's different than your tax filing. It's like a separate obligation you have as business owners, as the corporation owners. And if you incorporate it federally, then you file this return with Corporations Canada. And if it's incorporated provincially, then it's with the province of Ontario, and you do it on an annually basis. And it's a form which usually will just confirm the name of your corporation and double check that your company is not offering shares to the public, so that you own private company. And if it's public, then you have to go through additional requirements to complete. And why it's so important, because when it's an obligation by by the government to make sure that the information that the general public receives is updated. So that's why this report is so important. The second part of the annual corporate compliance is the actual update of your minute book. So all these changes we've just described, it's important that you have it in the form of resolutions so that everything is updated and properly reflected in your minute book. So it's just exactly what happened in the past year. You can see it in your corporate records. And I would like just to pay additional attention to the registered address because comes in practice quite often. Please keep in mind that the registered address that you put in the articles of incorporation and the registered address of the first board of directors is a public record. So what it means that practically everybody can search and get the information about the registered address. And if you decide that you would like to start your business from your home and you would like to use your personal registered address for these purposes, just be very careful that from confidentiality perspective, it can be easily accessed by other people. In these circumstances, if you would like to use your home address, we would recommend to consider, there is options with virtual offices that it's like a nominal, amount to pay and you can get a registered address. And this way you kind of separate it from your personal home. So you do not want every customer and business partner see the exact registered address. Sorry, you have a question?
Okay,
Yeah.
Okay, so the virtual office registration, considering that with the band, the company being on and reserved gets an exemption, are we allowed a virtual office on it?
This will be a probably, yeah, that would be more, complicated because in this way you would have to go through the tasks that Alyssa addressed, and it will be very important to really see the real operation of the business where it takes place, because this might be, not so applicable because there is a risk that the test might not be met. So it's just like more consideration from privacy protection. So to make sure you do not put like personal information. Sorry.
If a corporation has been registered already with a private address, like your home address, if that address was to be changed tomorrow, would that new address be the public one, or would the private home address still be available in public?
Unfortunately, there will still be some record to your, it will not be, so for instance, for public companies, if you go on Corporations Canada website for federal companies, and you go on the website, you search the name of the company, you will immediately see the registered address. And when you update it, then it will not be visible for general public, so it will be updated on the, on the Corporations Canada website. However, if you would request a corporate report, then you can actually see what was the original registered address, so you can still, see it through the report. But absolutely, if you would like to protect your privacy, it's just important to, change it as soon as possible. So at least it's not actively available, on federal website. And that's I really wanted to mention this to you, because that's what we see quite often, that business owners would like to put their personal address, and then really would like to pay their attention that it's going to be public record. And also, quick comment about the virtual minute books. This is actually, the approach Gallings is our firm is taking, because it just much easier and it's more practical, because this way you have access and we ensure that you have the most updated records, and it's just much easier to maintain it and to make sure that records are properly protected, because when it's a paper minute book, it might be damaged. You might lose, there is a chances that, the corporate records cannot be located. So this is like our practice right now. We really suggest our clients to go with a virtual minute book, as just from practical standpoint. And just very briefly to mention the potential risks, what can happen if corporate records are not properly taken care of. Number one risk, unfortunately, your business can be dissolved, because if Corporations Canada and Province of Ontario do not receive your annual return, they would send several reminders. It will not happen immediately, but they will send reminders, and they will say that this is the filing window you should follow, and there will be exact dates when the annual return should be filed. But if they do not receive it, that would be the response. So the business will be dissolved, because once again, it's the obligation by the federal and provincial government to protect the general public and to make sure that the most updated record are received. So this is like a very unfortunate scenario that you do not want your business to, the path that your business would take. So just please keep this in mind. And other really significant risk is the validity of the corporate actions, because if minute book is not properly updated, and minute book is actually a written evidence, so it's an evidence of what is happening with your business, what is happening with the corporation. So this is the way to protect your business and to make sure that there is a proper record of things that took place in the past year, and in all past years of existence of your business. So if it's not properly done, then the validity can be challenged. And actually things get really, I got it, sorry, it was on the previous slide. And what actually, when it comes and becomes really complicated, when there is a dispute between shareholders, and there is a different, version of events of what actually happened, and if there is no corporate records, it's extremely hard to help business in this situation. And there is a common belief and understanding that we as lawyers, we usually see things in a dark light, and we take things as a worst case scenario. But unfortunately, in our practice, we see these situations happen quite often, that there is a dispute between shareholders, and they cannot come to common grounds. And it's extremely difficult to help when their corporate records are not updated. And just from, cost perspective, it can be extremely expensive to litigate through this process and make sure that everyone comes to the meeting ground, and that the resolution is found. It's just much easier when it's clear corporate records, everything is completed. And other things to consider, that it's also much, also in terms of costs, it's much cheaper to keep things in right away than try to look at it retrospectively and try to update your minute book and ratify several actions and just look back on things that already took place. And two final comments in terms of your minute book. So in the situation when you are looking for financing, when you're looking to take any loan from a bank, minute book will be the first thing that the bank would ask to check and to review. And if the corporate records are not properly updated, it will be very challenging to get this line of credit or additional loan from a bank, because this is the due diligence process they will go through to double check that everything is properly done. And the same will be in the situation of a sale of your business. So if your ultimate goal is to sell the business, and we spoke about benefits of selling the business as a share transaction, so in terms of tax benefits. So if you consider selling your business in a couple of years, that would be also the first request the purchaser would ask, is the minute book, and they would like to see the corporate records of the minute book. So just to summarize, it's just crucial to keep your records updated to make sure that your minute book is up to date, and you do your annual return filings and your annual resolutions. I'll pass it to Alisa.
So we don't have much more to go through. I would just add to Maria's point is that we don't want to scare you either. Corporate records, especially for smaller businesses, are pretty easy to maintain. And so when we talk about maintaining the corporate record, often we think about it more bigger scale when you have multiple shareholders and it's more share classes. It's very complex, and there's constantly moving pieces in a business. That's when a corporate record is really more complicated to upkeep. But if there's just one individual, you have one director, you have one shareholder, it's very easy to update and keep your annual records in place. So I wouldn't worry too much about that either, and that shouldn't scare you from being open to incorporation either. And often, if you work with an accountant or a lawyer to incorporate, they'll give you almost like a checklist and reminders of, and sometimes the lawyers, if you do keep it with the minute book or the minute book with a law firm, they can do all of the annual corporate upkeep in as well. So you pay a fee, of course, but then it's all there, it's all done. So I just wanted to mention that. The last thing I want to touch on is procurement. So what procurement policies apply for Indigenous businesses? So it doesn't matter if you're sole proprietor or if you're incorporated, this may apply to you. And so you may have already heard of this. It's the Procurement Strategy for Indigenous Businesses, which is the Government of Canada's policy to support Indigenous businesses with procurement opportunities across Canada. I'm not putting a pitch in here for the federal government. I just want to mention that. But the federal government incorporates Indigenous economic considerations, or takes Indigenous economic considerations in its procurement activities by allowing departments to set aside procurements for eligible Indigenous businesses. So this includes all Indigenous businesses. So this includes sole proprietors, limited companies, cooperatives, partnerships, not-for-profit organizations. And so regardless if you're incorporated or not, this may be something that, of course, I don't think it's any cost to you to be included into their database and to be considered. To be considered an Indigenous business, the following criteria must be met. At least 51% of the firm or the business must be owned and controlled by an Indigenous person. If the firm has 6+ full-time staff, at least 1/3 of the employees must be Indigenous. Yeah.
I was reading the PSIP policy, and when I read the list of businesses or types, which one of those, like sole proprietorship, limited, cooperatives, partnerships, not-for-profit, and nowhere in there does it say corporations. So I was like, does it include corporations? But I think you just...
I think it does. I believe it does. I would, even if you are incorporated, I would still go and include yourself in the database anyways. And I don't think it would harm you or put you at risk for anything if you were incorporated and you were included. Because I don't think there's a fee to be included into the database. And so I think even if you do decide to do that, I think you'd be fine. And I think they would consider you. So again, like I said, consider registering into the Industry Canada's Aboriginal Business Database. Here are some of the benefits of that to be included in the directory. There's an increase, and I pulled this straight from the website, to be honest. I didn't make this up. This is their pitch of what are some of the benefits to be included. And so For them, there's an increased visibility of Indigenous businesses. The directory is a public search, similar to if you want to pull up a public incorporation. There's a public search engine that's available for both municipal, provincial, and federal procurement communities for Indigenous suppliers for various sectors. It's fast and easy to register. They say it takes about 20 minutes to register in the directory. ISC will review, approve, and publish the information within 2 business days. There's partnership built-in opportunities. Business can use the directory to seek out opportunities to form partnerships or joint ventures with other Indigenous businesses and identify potential subcontractors. Keeps you informed. Businesses registered in the directory are informed of upcoming Indigenous procurement events, networking opportunities, and important procurement news. Supports the Indigenous Business Network in Canada. The directory is one of the main tools used by the Government of Canada in determining whether there is an Indigenous business capacity for particular goods or services. So the more businesses registered demonstrating capacity, the more likely departments will set aside contracts within this policy. And just lastly, I've highlighted some of the available programs or services for Indigenous businesses. You may know most of these already, but I just pulled these resources or these organizations or institutions, some of them are banks, to be available to you if you need support. Maybe you need capital support in terms of starting your business or maybe incorporating. These are available resources to you that I quickly found. And so that's it for us.